I guess I'm ready.
Yeah. Hey guys, everyone that's waiting. This is Tyler and Harry from Alpha Traders Country Club. We're going to give it a few minutes. This is Tyler and Harry from. We're just going to give it a few minutes, wait for a few more people, and then I'm going to let them kick it off.
That was echoing for me. I'm not sure if that was.
I think the YouTube, you got to make sure you mute it.
I don't have it up.
Yeah, I think that was just my background. I think it should be fixed now. So just going to give it a few more minutes and then.
Unbelievable, Adam. Unacceptable.
Should we play a little music in the background? Get a little vibe going?
I'm excited to be starting to actually get into some strategies and some actual trading. This is good.
Yeah, I used to do trading, but it's been a long time, and I know you have to be in it like 24/7 to even get a grasp of it and like to continue. It's a real mental game.
That's the big one there. I've never seen a man so proud of himself.
I trade with Spanish guitar in the background. Soothes me.
You actually?
I'm ready to go when you guys are.
Yeah,
let's get started.
You'll have to mute that music.
You ready?
Yeah.
Boom. Good day.
Is that my part where I've got to say good day as well?
Saying good morning.
All right. Let's get into it. Welcome
Yes.
back. This is Masterclass number 3 now.
Correct. For the Hydro Whales community, we are very happy to be here. Today is going to be the juicy stuff. The first two classes that we had was really introductory to what it means to be a trader, what you can expect to be a trader. Then we came in and talked about, on the second class, the indicators that we often use, everything from the SMAs to the pivots, which is ones that we like the most, reading volume, reading candlesticks. And now we can get into some of the strategies that we apply to actually start entering trades. And there are different ways of trading that we will get into this course. This particular hour, we will go over not everything you need to know, but the introduction of what is swing trading. So that is what you can expect to get out of this next 45 to 1 hour. Lloyd, do you want to take us, or should I call you Lloyd or Tyler?
You can call me whatever you want. As you guys already know us, it's almost funny at this point that I have a slide set up of who myself and Martin are. As you guys know, we are co-president Harry and co-president Lloyd in the Discord. But I have left this slide up just in case we have any Hydro Whales Mining Club members in here who haven't watched a masterclass yet or don't know who we are. So I am Tyler Jordan. I'm originally from Australia, currently living in the US of A, and have been full-time trading and investing for the last couple of years. Now co-founder of Alpha Traders Country Club, trying to bring as many people to financial freedom through trading and investing as possible. Martin, do you want to introduce yourself a little?
My name is Martin Papp. I'm Harry in the Discord. I'm also co-founder of Alpha Traders Country Club. I am a full-time trader and investor. I started running my own business actually in China, where I lived for 10 years. Started that company with my wife. I now have a son, 5 years old. We decided to move back to the United States in 2019. And since then, I've been working in the United States, learning about the markets, trading the markets. And that's where I met Tyler through a educational stock trading service called TrueTrader.net. And that's where we got together and we started trading not only stocks together, but we started doing a lot of crypto as well, which then kind of led us into NFTs, where we then formed Alpha Traders Country Club. And so we are a nice little snuggle of sloths that enjoy trading stocks, crypto, and investing in NFTs.
Incredible. Side note, that Web2 company, TrueTrader.net, is also a founding partner of Alpha Traders Country Club, and you do get a whole range of live streaming and benefits from that company within Alpha Traders Country Club. So we essentially, go on.
Oh, no, I didn't mean to interrupt. I was just going to say, I just realized that my profile picture there is actually, that's me in China at my tea house. So I started a tea company. You can actually see in the background some of our teas and some of the kombucha we made.
Incredible. All right, let's get into it. So what is swing trading? Why is it important? What are we going to be doing? And how are we going to get there? We have a lot of people that come into trading and they come in, they see a whole bunch of charts. They have no idea what is going on. And then, the first step that we try and lead people down is figuring out what you want to trade. And that comes in many different forms. As you guys probably are aware, there's day trading, there's swing trading, there's long-term investing, there's options, there's Forex, the list goes on and on and on. So today we're focusing on swing trading primarily. Now, swing trading is where a tradable asset is held for one or more days in an effort to profit from price changes or swings, as they're called. What does this look like?
Is that the same thing as day trading?
It is not the same thing as day trading.
Wait, now I'm confused. What's the difference?
So this is why I have this chart up here. So as you can see here, each candle in this chart represents one whole day. Now, when you're swing trading, you're taking a trade over multiple days, weeks, months, over a longer time frame. Whereas day trading, you would be trading off a much smaller time frame, maybe a 1 minute chart or a 5 minute chart, and you would be in and out in a matter of minutes, a matter of seconds, sometimes a matter of hours. But day trading is pretty self-explanatory. It is trading in one singular day. And swing trading is what we primarily focus on, where it's a lot slower moving. We don't have to be glued to the screen 24 hours a day. We can make a plan, we can set it, and we don't even have to do anything now for the next couple of days, weeks, months, until our plan is crossed.
Is it a better strategy than day trading?
Depending on who you are. So there is some people who when people come into our community, we speak to them about who they are as a person. Some people like to be in and out of the market in a matter of seconds. That's what suits them and their personality. Some people like to not trade at all or think they want to trade, but realistically, once we dig into it, they want to be investing long-term and not even looking at charts. So swing trading really is a personality type thing. There is no strategy that's better than another. There is no type of investing or trading that is better than another. It's what works for you. And that's one of the common themes that you're going to see, not just in this presentation today, but in presentations that we do and in every conversation that we ever have, in every message that we ever send. It is what works for you. And there is so much out there. It makes me cringe seeing it that, everyone, just to be able to get clicks, it's like, this is the one strategy that's going to make you $1 million, or this is the best strategy, or this is this. And it means nothing. It's just to get you to click. Because realistically, the way that I trade and the way that Martin trades, completely different. The way that Martin trades versus how maybe Adam trades or how you trade, completely different. Everyone trades differently. We all have a set of rules and a set of trading strategies, but the way that we trade them is very different. So what we're trying to achieve in these masterclasses is giving you guys the overview and all of the tools to make this work for you. Because what works for me might not work for you exactly. What works for Harry might not work exactly for you. But what we can do is give you all the tools that we have that says, this is the whole playbook, make it your own.
And just to add on to that, a little bit more of a personal story for me that illustrates this is that I started out with long-term investing, and then I moved into True Trader, where we're really focused on day trading the stocks, and that's only in the very first hour of the market open in the morning. And I did that for over a year, every morning when the market opens. And out here in California, that's 6:30 a.m. And I can see all of these amazing traders, and they are up and they are going, and they're hooting and howling on the live stream, and they're so on top of their game. They're in 5-6 different trades at a time sometimes. Whereas me, I'm half awake. I'm trying to follow everything, but I've got a brain fog just because I'm not that kind of a morning person. And even if I did get up early enough to get the brain fog out, we're talking about me waking up at 5:30 in the morning to be ready. And then naturally, just my personality, I like to really think things through and consider things slowly. And it naturally led me to now mostly focusing on swing trading. And so that's a good example of where it doesn't matter what you get into right off the bat. What matters is that you go in learning as much as you can, try different strategies, absorb, and then slowly over time, you will craft your strategy and you will find what works for you. And that's why we said in the previous sessions that, to become a trader takes time, because there's so much exploration involved in figuring out what your strengths are and what your weaknesses are. And I found that my strengths is going to be definitely in swing trading, not just because I'm not a morning person, but everything that goes into it, the analysis, being able to be patient and relax, that works really well with my personality. And some people can't. Some people, I enter trades and I post them, and weeks will go by and people will be dying saying, well, what are we doing? Why haven't we sold? When are we going to sell? And I'm still chilling because I want to let the trade play out. And it takes weeks and sometimes months. And some people are really good at doing that. And some people, that's not them. Well, maybe then you should consider yourself more of a day trader or a short-term swing trader. So it's all about finding that comfort zone for you. So what we're going to talk about today is definitely more in my comfort zone, which is exciting. Let's continue.
Let's do it. So identifying your strategy. How do we get there? Now, I'm sure that this slide here is pretty much, I mean, I know that this is how I felt when I started trading, and I'm almost certain that this is how you feel when you're looking to find a strategy or when you're just starting trading. You Google things, you pull up TradingView, whatever it might be, and you see every man and their dog talking about this is the strategy. Even when you're trying to look at things or learn things, you're just overloaded with information. So the common theme that we're going to be trying to do here today specifically is trying to simplify things and really narrow your focus, because the biggest or the quickest way to fail in this space is basically just to listen to so many people and be so overloaded with information that you don't know where to start and you don't know how to narrow that focus. So we're actually going to go through a number of different strategies that we use and try and find the ones that work for you. Now, one thing to remember as we go through is that no matter what we are bringing to you, no matter what you're seeing online, your best bet is to look at everything and find what works for you. So don't try and do everything. Don't look at what we have and be like, I'm just going to do all of what the alpha traders guys are doing. Find the one or two things that work for you, and then move on from there. Ready to move on, Martin?
Yes. I'm just pulling up one of the charts I want to put into this.
No worries. So tip number 1, start with one strategy only. Simplicity is the ultimate complexity. I know I just touched on this, but it really is that we see so many traders come in and they're talking about 50 different indicators, 15 different strategies, 5 different people that they're working with. They're talking about Forex, stocks, crypto, NFTs, real estate. They're doing everything at once. It's just too much. So let's bring this down. If you're working with cryptocurrency or you're working with stocks, which is what we're focusing on today, find one strategy, just one, and do not move on until you have got a very deep and profitable understanding of that one strategy. Just to add on to that note as well, you will, and it's funny watching this play out all the time, and it's a fun predictor, is that when we have people that come in, they start trading, and we make sure to narrow their focus into one strategy or one cryptocurrency or one stock or whatever it might be, and they're like, well, this is great, I'm just going to focus on this, the whole way through. And we have to giggle because after, a couple of months, your knowledge will start to grow and you'll be presented with more opportunity and more strategies and more knowledge on different things. And it's going to become harder and harder and harder to keep that focus, because there's going to be a million shiny objects that are running around. Tip number 2 is, again, we're trying to channel that focus here. So one thing that I always give to new members is to pick 5 tickers to focus on, and that's it. A ticker is a cryptocurrency or a stock. So if you're looking at cryptocurrencies, you might pick Ethereum, Bitcoin, Solana, Cardano, and Matic, say, and don't deviate from those. Don't be looking at 50 different tickers and having a watch list where it might take you 4 hours just to get through it. You want to again, narrow that focus to 5 tickers, crypto or stocks, and focus on those. Tip number 3, again, in the same line of conversation, is finding one person, mentor, coach, or group, and do not deviate from them until you have mastered that strategy. We see so many people who have 3 different coaches for 3 different things. They're in 6 different groups that they're paying hundreds, if not thousands of dollars a month for membership for. They're learning from so many different angles, and there is no way to learn 15 to 20 things at once. So if you're going to go with a group or a person or a mentor or a coach, go with them. If you're going to go with True Trader, focus on that 100%. Get rid of everything else and focus on that. If you're going to go with Alpha Traders, focus on that 100%. We have only a few members who have been able to do that, who have been able to come in, focus 100% and remove everything else. And in 3 or 4 months, they're already profitable. We've got a couple of traders who are showing profitability already. And that's the quickest path forward. The quickest path forward is the straightest path forward. Do you have anything to add there, Martin, before we go into some different examples?
No, let's get straight into it. Let's get into the nitty-gritty details of a swing trade.
Or the juicy parts is what Sam says.
I like it.
All right. Trend trading. What is trend trading, Martin? So
we're going to cover basically 2 swing trade strategies in this session. This is a swing trading 2-course. So we're just going over part 1. So let's be clear that this is not the only swing trading methods, but these are 2 that we often employ, that we often use. The first one is trading with or against a trend. We have talked a little bit about what is a trend, but let's maybe look at the next slide to explain that. This is a really good example of what a trend is. And it might seem obvious to people. They're like, oh, well, if you're going up, I can see the uptrend, the zigzags up, or if it's a downtrend, the zigzags down. But let's be really explicit and clear about what we're talking about. We're talking about when in this particular chart, you see it's every candle is a day. And we're looking to be an uptrend, we're looking for what we call higher lows and higher highs. So that means at the lowest point, you then have the next lowest point is always going to be higher than the previous lowest point. And that's what you can see on the bottom side of that trend is every time it dips and comes back up, that low point is always a little bit higher than the previous low. And then same with higher highs. Every high point that you see there always goes a little bit higher than the previous high. And that's how you establish an uptrend. And there are going to be different definitions even within this of what's considered an uptrend. But generally speaking, and what I would go off of is that you need to have at least 3-4 points of contact before you can call it an uptrend. So meaning just because you put in one higher low does not mean you're in an uptrend. You need to see a higher low and a higher high before you could consider that an uptrend. So with Bitcoin here, at what point would you have recognized, because it's easy now in hindsight, you can see it, but at what point would you have recognized that it's in an uptrend? And to safely say it's in an uptrend.
Yeah. Are you asking me or are you asking the people?
I'm asking you because you're the only one on here with me, but I want people to be thinking about this. This is where it gets harder than you realize. Is that you see that third higher low? Can you show your mouse over it?
I'm not sure that you can.
You can't. Okay. So it's the third orange circle on the bottom to the from left to right, and you see that there is this nice bounce that it has. Now, the thing here that you have to be careful about is that you don't actually know that's a higher low until you've put in a higher high. Because what if on that, see that bounce there? What if that big green candle there where that circle is, what if the next candle actually turned out to be a big red candle and it went down, you know, another leg and actually broke that previous low from before?
So with every orange circle that you guys are seeing, this trend is confirming over and over and over and over again. So this is an uptrend. This is making higher highs and making higher lows. And for this to, if you're wanting to swing short, you're looking for the same thing, but reversed, which is this. And this is a downtrend. So you're looking for lower lows and lower highs.
Yeah. And so can you go back real quick? Just, I want to finish that. I know that you were making it simpler, but I need to finish what I was saying. The only way you know that's an uptrend is on that third higher high. So that third orange circle on the top right, only when it broke that level of resistance on the second circle did you confirm the uptrend. And that's when you look to then start entering on the fourth red circle or the fifth red circle. All right, let's go to the downtrend one. Now, you see that yellow line that we put on the top there? That's a trend line. And you always want to try to get it to have the most points of contact that you can have. So we've got it touching 1, 2, on 3 different wicks, and then there was a little bit of a false breakout on that third lower high. Those are areas where you can look to start entering the shorts. So when we say we join a trend and we start trading a trend, you want to make sure you're not just blindly just going into it at any point. You want to go into those trades when it reaches those extreme support or resistant levels. So in the case of when you're shorting, you want to join the trend as close as you can to that yellow trend line as possible. And that way you're getting the best risk reward ratio you can find. You set your stop losses at a level where you can clearly see that the trend has been broken. And you're leaving a lot of room for you to take profit because you're riding the wave down. So ideally, in an ideal scenario, what happens is that you get just to start riding the wave down and you just keep bumping down your stop losses. So no matter what, when eventually in the trade, you're going to be profitable no matter what. And the same with an uptrend. Ideally with an uptrend, you just ride the wave up. And then as you creep your way up, you then move up your stop losses. I know this might sound complicated, but I hope that if you guys listen to this back again, you're understanding what I'm saying. I'm going to assume that you guys want more information than less.
The one thing that Martin started touching on there is stop losses, and deciding where you're wrong, and that's something that, so we have this is part 1 to swing trading. Part 2, we go into stop losses, taking profits, entries, exits, and all the nitty gritty of the details of trading this. Whereas this masterclass is about being able to identify the strategies and how to choose your strategies. And then moving forward, we will start going into as I said, the specifics of what you're looking for, your exact entries, your exact exits, how much you're risking, how much you're making, where are you making that, etc.
Trader Mike just asked a question. He said, "Is a 3-to-1 reward to risk ratio the minimum ratio for an entry of a trade?" I will briefly answer that, and that's something that we'll go in a lot more detail in part 2. But the answer would be, ideally, we would love 3-to-1 ratios all the time, but no. Getting to 3-to-1 can be very idealistic. Oftentimes, the trades that you enter, you won't get that great of a ratio. So I would say that the minimum threshold, meaning like at which point you would definitely not do it, would be anything less than 1-to-1. Usually, if you can get a 2-to-1 ratio, that's pretty good.
This also goes back to our first masterclass, where we speak about the mentality and the emotional and mental side of trading. And with trading, you come in with some high expectations, and it's funny because I've acknowledged and witnessed as traders begin to be in this game for longer and become more knowledgeable, and the more money that they're making, the less they're expecting. So we have a trader on live stream every Monday, Wednesday, and Friday. You can see his screen, talk to him, everything as he's trading the open. And he's taking 0.8% of a trade, usually between 0.6 and 1%. You average that out about 0.8%. And it's funny because it's not very great to think about. You're like, I don't want to make 0.8% on a trade or 1%. Like it's pathetic. I'd rather be making 3, 4, 5x my money. But it goes back to our expectations. And as Martin said, 3-to-1 is if you can get 3-to-1, that's incredible. But it doesn't come around as often and anywhere near as consistently as it's advertised on Twitter by these traders that you're seeing who are making these massive gains. That's a lot of the time just clickbait and ways to get you in.
This particular chart that we have up now is an hourly chart, meaning that every one of those candles is an hour. This would be an example of what's happening in Ethereum right now. We've got a little mini downtrend that's forming. And you can tell by the trend lines that I've put in, kind of the areas that if you were looking to short, would be on the top end of that trend line. Every time it reaches that, we get a pullback. And those are areas where you can dip in, and then you take profit before you get to the bottom trend line there, which is areas of support. Let's move on to the next one. I'm not going to go into a lot of this, but this is just an example of what one of my charts looks like. Once you get a little bit more, start adding a few more indicators, and things can get a little bit hairier. But this is essentially an example of what I would call an uptrend. And there's a good point to point out is that sometimes things aren't as clear cut as you always want them to be. So if you look at the 13th, October 13th, you see a nice break where you actually put in what it looked like could have been a low. But the uptrend, if you start from October 3rd, it's actually still intact. And so this is where things can get a little bit dicey. But if you zoom out, it's still an uptrend. Also, what you see there with the lines, the supports, the purples, the blues, those are pivots. And those are also good areas of levels of support and resistance that can help you set your entries. That yellow line that's curved on the bottom is an SMA. And a great example of how you could have entered a long on this would have been that you've established an uptrend, and then on October 22nd, on that dip back down, you could have entered right along that SMA support.
This goes back to our masterclass number 2, our chart reading masterclass, where we went into the detail of the weight that SMAs hold, pivots hold, and different indicators. So what we're doing in this one is we're identifying trends and different ways of trading, and this is to be used in conjunction with what we spoke about in the second masterclass. So we're not looking at a trend. Like say with this one, we're not looking at a trend that and just having a blank screen and just jumping in and out. We have, as Martin's pointed out there, we have trend lines, and I've tried to keep it as simple as possible to not confuse anyone. But within that chart, we would then pull up pivots in there. We would have SMAs. We would have all of that, the volume, things like that in there, and we're trying to stack as many things as possible, which we will go through the method of stacking things in your favor to increase your probabilities. In the next masterclass.
And when we say stacking things, what we mean is stacking confirmations using different indicators to point us in the same direction, to give us more conviction that this is a valid trade that we want to take. So, for example, that's an hourly chart right there. That I would never just take a trade based off of that. I would only take the trade after I've also looked at it on the daily chart, after I've also looked at it on a weekly chart, after I've also looked at what Ethereum and Bitcoin is doing, because that's an altcoin, Vulcan Forge right there. So you're looking for all those different layers of confirmation for you then to join the trade. Okay. This is just an example of another trend that was on Bitcoin on an hourly chart that you could have taken advantage of. You see that downtrend channel. If you had identified that downtrend, which would probably have been you could have identified it basically. So you broke it here, broke down. So you basically could have identified the downtrend on between the 10th and the 11th. And so if you could have entered a short on the 11th, between the 10th and the 11th, when it hit that, when it rallied up to that blue SMA line or to that trend line that you see, and you could have wrote it all the way down to the 12th or 13th.
You're seeing those dates at the bottom of the chart, by the way.
Yeah. Now here's something that does happen, and this is what you have to be prepared for, is that let's say you entered it a little bit later let's say you entered it on the 13th. Well, it broke the downtrend. It broke out of the downtrend. And that's where you would have stopped out and you would have taken a loss. And that happens. And that's part of trading is accepting those losses and moving on to the next trade. But at least what you've done when that broke out of the downtrend and you stopped out, it was a clear indicator that your thesis or the trend was broken. And that's the best thing that can happen, is when trades are straightforward. And that's what we're looking for. We're trying to make trades straightforward. And so it's not just, oh, I don't know what it could do. I mean, you start to doubt yourself. What we're looking for are clear confirmations that say, continue on the trend. If the trend breaks, then we're out. And that's the beauty of trend trading, is that it's clear cut.
I want to quickly add on to that point as well, about the fact that you can enter and get stopped out and the trend can be broken. Now, what we're looking for here is, nothing is 100% in the markets. To be fair, nothing's 100% in life, but specifically in the markets, things are, usually 40%, 50%, 60%. Any higher than 60% is pretty unbelievable stats for any strategy. So what we're looking to do here is not to join a trend and be right. We're looking to join a trend based on the probability of being right. There is a, whatever your stats are showing after you've, been doing this a while, might say that you're only right 50% of the time, which is where your risk to reward comes in. And, if you're entering this downtrend on, say, the 13th and it breaks, that's fine. That's part of your 50% of the time that you're wrong. So you just stop out and you move on to the next one. And that's what we're looking for here. We're looking to stack up confirmation in our favor to give us the highest probabilities. Let's move on to the next one.
Private Sniper Crypto asked, do stats like 7-day high, 30-day high, etc. have value in swing trading? Like, would it be worthwhile focusing on 5 coins and comparing current values against any of these stats? And the answer is it could be. It really depends on what are the indicators you want to focus on, and then creating a strategy based on the data that you collect. So, for example, I don't use 7-day highs or 30-day highs, but I do use ATR and DTR, which are average trading ranges. So I can see, I have an indicator where I can see when does the price move beyond its typical trading range in a day. And I can see that I have it on my 5-minute chart and my hourly chart. And those can work and so looking at 30-day highs or 7-day highs can also be one of the tools that would help you identify those kind of things. So the point is that there are a ton of indicators and a lot of them you can use. And so this is where we go back to the strategy and the tips in the beginning, is that it's really about focusing on a few, getting familiar with them, seeing if you like it or not, trying to make it work, try it out for a few months. If it doesn't work, then you basically retire those strategies and you move on to indicators that keep the ones that work for you, and the ones that didn't, let them go. There's no shortcut. It takes time. So, I mean, the indicators that I use are the ones that I've brought with me over the last several years of trading that I like. And I have a whole list of indicators that I've used in my history that I'm no longer using. It doesn't mean that they don't have value to other traders. It means that for me, strategies and the trades that I've taken, this is what's working.
I want to add to that as well, and it's something that we get. It's a big conversation that pops up numerous times in our company at Alpha Traders, and it's finding what you know and sticking with it, and that's kind of what we went over at the start, where I said, everything works for someone, but what works for you is very different to what works for me, and what works for Martin's what works for someone else. So, and it's something that comes up a lot. There might be someone that jumps in a Discord and says, hey, like this announcement's just came out, or this earnings, or this meeting's happening, or this SMA is happening, or this particular indicator showing this. What do you think about it, Tyler? Or what do you think about it, Martin? And then we have to turn around and say, we don't know, because that's got nothing to do with what we do. And we're not saying that that's a wrong indicator or that that's anything wrong at all, but that isn't something that we use. Now, there might be hundreds or thousands of people who trade solely off this one indicator. And I'm sure that there's probably thousands of people who trade solely off the 7-day high and the 30-day high. But for us, that's not what we use. And if that works for you, very much like I put in the comment just above that one to Trader Mike, I said, you need to do what works best for you, regardless of what we're doing. So if a 3-to-1 risk to reward is what your strategy gives, and that's what works for you, or if the 7-day high or the 30-day high is what works best for you, all the power to you. And that's what we're actually trying to enforce, is we're trying to give the tools to do what's best for you, rather than giving you the tools of exactly what we do. We're trying to give you the tools and say, make this work for you in however you can.
So to answer your question without feeling like we're too wish-washy, is no, I don't use those indicators, but sure, they have value for other swing traders. Can you go back one slide real quick? I realized, so this isn't the updated one. So any changes I've made in the Google slides are not in here, huh?
Yeah, I put it in the private chat about that.
Okay. Well, never mind. Let's continue. I want to, unless you can copy that image on slide 16 and put it on here. That'd be too hard, right?
I can't.
Okay.
We just move on. So, strategy number 2, the big drop. This is a hard one. This is one that there is very few people who are able to do it, because with this strategy, you're basically, looking fear in the face. As I've written there, max pain equals max opportunity. As the famous quote goes, be greedy when others are fearful, and fearful when others are greedy. Criteria. Go this, Martin.
Yeah. So this is a strategy that we learned from True Trader. In particular, one of the professional traders there taught this to us, and it's been one of the largest, how do I say this, profitable strategies that has made my year. And it's a very powerful one that if you find the right criteria and the right situations, it can turn out with really big returns. And so what we're looking for is we're looking for stocks. And this, I'm going to say stocks because I don't think this applies to crypto as much, with high institutional ownership. So we're looking for good companies that have high institutional ownership. Means that they're vetted, there's big money in it, it's a blue chip. And we're looking for ones that have dropped over 25% within 5 days. So we're looking for real emotional moves down. And one of them that we did that was an example of a trade that we took at Alpha Traders Country Club is Netflix came out with its earnings several months ago, and the subscriber numbers were down more than expected, and the price dropped over 20%. I actually don't remember the exact amount that it dropped by.
It was almost 30% on the first arrow there, and it was over 30% on the second arrow.
Yeah. So in one day, it dropped over 30%. Now, it's important here, and this is where the nuanced strategy really does matter, is that the importance here is, can you understand why it dropped? And if it's nothing that was materially changing the business, like if it's something that yesterday Netflix, and then the news breaks, drops 30%, and the next day Netflix, is the company fundamentally different? And if the answer is no, it's still the same company, it's still doing the same things, then the way we like to look at this is that, oh, now you can get into a great company at a huge discount because you're buying an asset. So what we really like to see, and generally where the strategy works really well, is where the expectations of an earnings call are not met. And so you see huge drop just because of an arbitrary expectation that was set by some analysts. It's still the same company. People are still watching Netflix. And so you have to, in a time of fear, when everybody's jumping out of this and dropping, that's when you start buying. And that's what we did. We started buying Netflix. I should pull up the
Here.
Now with this strategy, it's important to know that this isn't a fast trade. This is something where when you start buying, you know that it can take months, if not a year or two even, to get back to the levels where you make your profit. But in these type of trades, when you're buying these big, good companies, it's okay to be holding on to that stuff. And so with something like Netflix, what we do is we scale into the trade. So we don't try to bottom ticket. We don't try to guess exactly what the bottom is. We start to scale into it. And that's what we did with Netflix over the course of several weeks, several months. And generally speaking, with a very high probability rate, you're going to get really nice bounce backs. And you can use Fibonacci retracement indicators to kind of measure this out. But essentially, that's what's happened, is that you have an emotional sell-off. And then over time, people start to relax. Company comes out with some numbers. The expectations have been altered or changed. And these things come back. Now, very, very important to say that this does not always work with companies that aren't solid. So I would not recommend this on an altcoin. I would not recommend this on a company with low institutional ownership. And I would say anything less than 60%, 50%, like this doesn't apply, because you'll get companies that will just continue going down and down and down. So we're talking about solid blue chip companies. When you see those kind of big drops off of arbitrary news, those are the really A+ trades to get in. And that's when you hear all the time on the when investors talk about, buy into fear, sell into greed. This is the ideal strategy to implement that personifies that. And this turned out to be a huge trade. Netflix, we made, so after about, what was it, 8 months, we sold out of this trade at 40% profit.
Which is huge.
Yeah. I mean, that one trade alone could have made your entire year. And it wasn't doing anything crazy risky. It was buying a stalwart of the S&P 500, the Netflix company. Now, I will, again, add a little bit of a disclaimer to this, is that this trend works really well, or this strategy works really well in a bull market. So if you zoom out, the bull markets are going to be really excellent times to get in on these dips. Now that we've entered a bear market, it does add risk, and you have to basically be ready to add and hold on longer. So for example, Meta, people might be thinking about the huge drop on Meta. Yeah, the criteria fits. But I'm a little less bullish on it in this macro bear market environment. But if you've got the balls to do it and you've got the cash, hey, I mean, these are big companies that are taking huge beatings. A year from now, they could be bouncing back in a real way, and it could be huge gains for you.
We're coming up on our hour, so I just put in here the example of that Netflix trade. That is, where you can see there, hit final target on Netflix and sold the final half of the position, $274 for a 39% gain, as Martin was mentioning earlier. One thing that I do want to touch on as well, back to the probability side of things, is that not only do you have all the pieces to the pie that Martin was saying there, but your probabilities are raised as well. The lower that, or the more that a stock drops, or a cryptocurrency, the more that it drops in a short amount of time, the less likely it is to continue dropping. It has to, stocks and cryptos work on a range, and they always come back to a median, always. So the more that it drops and the harder and quicker it goes, your probabilities are increasing. Now, there's some huge disclaimers with that, and that's why this strategy is really hard, and your risk management has to be top tier with these kinds of trades. And that's something that we're going to go into in the next masterclass, is how to set your risk management and how to build into these trades so that you can stare fear in the face and come out a winner.
Yeah, I think that's a really good point to explain that speed matters. That criteria was very explicit. We're not talking about a slow grind down of 30% or 25%. We're talking about a fast drop within 5 days or less. And the only thing I want to add here is, why do you think that matters? Why is the speed so important?
Okay.
And the answer is, is because that means it was emotional. We're looking for emotional sell-offs. These are not cool and calculated grinding down where analysts are having time to think about it and they're starting to sell, and next week people have thought about it more, they sell more. No, we're talking about bad news comes out, boom, everybody freaks out to sell off. That's what we're looking for, and that happens with speed. If it's not fast, it's not emotional, it's calculated. And we don't want to enter anything that's a calculated grind down. Sorry, continue.
No, you're good. So let's round this out with a plan, and we'll go. This is basically creating a plan is the next masterclass. I will briefly go through it now, but this will be in great detail in the next masterclass as to exactly the specifics of each point. But the questions you need to ask yourself is much more than, oh, it's dropping, I'm in. It's coming up with a plan. Step number one, why are you trading? What do you expect to get out of this trade? Are you expecting this to bounce and you're expecting this to get 300% bounce? Are you expecting to get 2%? And again, why are you trading? Are you trading because it's a trend trade? Are you trending the big drop trade? What are you trading and why? And that basically boils down. This is a domino effect. So step number one is the first little domino, and each domino that it flows into the next one. Step number two is creating a thesis for the trade. Explain what you and why you think a stock crypto will move in a certain direction, which is what we just went over with that big drop trade, as well as the trend trading. We explained basically theses behind trades. So once that trend confirmed on the third point or the fourth point or the fifth point, our thesis was that it was going to continue by making a higher high and then a higher low. Like, we're explaining our thesis. Determine how much you are willing to risk. And again, that's something that we're going to really start to work on and manage in the next masterclass, is how much are you willing to lose on this trade? Are you willing to lose $1,000, $10,000, $10, $100,000? Everyone's different, and that is a very personal risk decision. Identifying your entry point. Again, as Martin was saying, you don't just see a big drop and then just jump in. You need to have planned and set in your head or on paper where you're jumping in, why you're getting in, where you're getting in. Be very specific. You're getting into Netflix at $274.34. You're not going to say, oh, I'm getting in this whenever I feel like it. Be specific. And then that's the same for the opposite. So once you're in, you're setting your exit points. Where are you taking your profits, and why are you taking your profits there? And again, be specific. So I'm taking my profits at exactly this point and exactly this point or exactly this point. And then it's the same for setting your stop losses and where you're wrong. And the question for that is, where are you wrong? Where does the trend break, or where does it breach your risk on the big drop trade? And those are exact numbers. It is not, oh, once it drops below this point, then I'm going to try and get out. It's once it drops below this, I am getting out at this exact price. Do you want to round this out with the last couple of points, Martin?
Yeah, I mean, we're going to go over this in part 2 because this slide is really important, and I would screenshot the crap out of this if I was you. These steps are crucial when you enter a swing trade. And this is why I like swing trading, because you take your time and you make a plan and then you enter. Whereas a lot of times with day trading, you need to do all of that in seconds. So with swing trading, you have the time, then use the time. How to use the time? By doing this checklist, by going down these steps and making the plan, visualizing not just where I want to enter, but where am I going to stop out? Knowing that before you enter the trade. So I'm going to finish this out just because we're coming up to the end of our session here, but know that this needs to be dissected, and we will dissect it together in the next class. So number 6, based on your stop out point, calculate your position size. Once you have your stop, you can then decide how much money to put into the trade. That is the only way you should do it. Do not decide how much money you're going to put in the trade based on how much money is in your account. And you're like, oh, I'll put in half. No, you base it on how much you're willing to lose. The only way you know how much you're going to lose is if you know at what point would you exit the trade. Number 7, write it down. All of this is getting to a lot of different numbers. Write it down because you won't necessarily remember them. And you need to go back and remind yourself as often as you need to of what your plan was, and you stick to it. Number 8, press play and let the trade unfold. Once you're in the trade, all of the decisions about how you're going to act in the trade should have already been decided. That's what we mean by press play. The script has been written. The director has spoken. Now it is time for you to sit back and just let it unfold, because you should already have your levels of where you're taking profit and where you're stopping out, and nothing else matters. Just let it play out. One of the biggest problems that traders have, and especially with swing trading, is that they get antsy and they feel they got to do stuff. They start to see the charts move around. They want to change their strategy. Like, oh, maybe it wasn't the best place. Let's change it. Those are emotional decisions, because now your money is on the line and you're reacting to the stimuli that's coming at you. Those swing trades, especially the longer term ones like the Netflix, that took months. When you enter these trades, or when I enter these trades, I don't check Netflix every day. I don't look at my swing trade account every day. I don't look at the P&L. There's no point. Just let it play. Let it play out. Number 9, after you exit the trade, review and rate your execution of your plan. How disciplined were you? Once your trade is finished, that's when you dive in and look at the charts and tell yourself where you did it wrong, where you could have done it better. That's where you collect the data and craft your strategy so you become better every time. So it's very important to say that you don't craft your strategy while you're in the trade. You don't change things while you're in the trade. You change things on the next trade. You change things after you collect the data, after you collect how this trade went, and you say, okay, where do I need to improve? How disciplined was I? Are there things that I could have done to make myself a better trader next time? If you follow all those steps, which aren't easy, by the way, you will be on a path to becoming a really responsible and high quality trader.
On that note, to sum that up into 3 words, it is time, patience, and discipline. And anyone who has been in our Discord or knows us knows that always ask for help in our Discord. We We'll jump on VCs with you. We will, we have a whole range of traders who are highly successful and are highly knowledgeable in helping you and getting answers to your questions and anything that you might need. Or you can ping us in the Hydro Whales chat as well. And we will try our best to make sure we see that and get to it. But yeah, anything you need, please reach out for help and making a plan or whatever it might be. I think that's it. We've gone a bit over time, so let's wrap this up. Any closing statements, Martin? You're on mute.
I hope from this session that we have identified 2 strategies for swing trading. One is joining a trend. That is probably the one we use the most often. Number 2 is what we call the big drop. And those come not so often, but when they do, can't be afraid to take them. Next session, part 2, we will go into more depth about that plan that we just went over, about how you decide where to set your stops, where you enter, where you take your profit, how much of your portfolio you should be using, how do you manage your risk, and how do you stay disciplined to make sure you follow through on your strategy. That's part 2, and it's critically important. So I would be hesitant to tell people just to start going in and trading right away. But if you do it cautiously. Understand that these strategies aren't foolproof. We're only talking in the realm of probabilities. We're just trying to get that little edge to be a little bit better than flipping a coin. That's all we're doing. Tyler, you want to elaborate that?
I was just going to say I'm going to post that plan in our Discord. So anybody that wants it, please come in, copy that, or save the image and keep that on your desk.
If you do come into our Discord, say hi and let us know that you came in from this class. That will let us know that you are there and easy for us to identify you, and we will welcome you. Thanks again to the Hydro Whales community, to Adam and Sam. You guys are awesome. We hope that your whale holders are getting benefit from this.
Incredible. Oh, Adam's back.
Hey guys, yeah, amazing session. Thanks for doing this for us. Can't wait for part 2. Anyone joining late, this will be recorded and on our YouTube channel. So yeah, thanks for having us.
Appreciate it, mate.
All right.
Thank you.
I'm gonna end it here. Thanks.
Chat soon. Bye.
Bye, guys.